Hey folks, John Najarian here. It's February 16th, just 2 days after Valentine's Day. We told you on the podcast that you can get a deal at GodivaChocolates.com. You can get basically a 50% off deal. So if you're in the doghouse, that's one way to get out of the doghouse. And they had free shipping, by the way. But I'm back in the Sky Suite up here in the penthouse at Chicago. And well, what are we looking at? We're looking at the market, record high after record high after record high. Some people read different things into that than I'm reading into it, but I would always go back to, as I said on Halftime Report yesterday, supply and demand. So I think there's more demand than there is an increase in supply. So if you take one side of that equation and move it up, more demand with the same amount of supply, you're going to see prices moving up. That's what we've seen. Now, some people, smart people, have also informed me about trades that go on in the S&P 500. Danny Riley, for instance, Mr. Top Step. Love you, Dan. Danny made sure that I was aware of this fund. Does a lot of 1-by-3 spreads. What's that? That means in the S&P 500, the big contract, the one that trades over at the Merc, they step in and they buy calls, upside calls or at the money calls. They buy one of those, and against it, they sell 3 out of the money calls at higher strike prices. So what does that do? Usually they generate a nice fat credit, which means if the market is flat or down, that trader makes a lot of money because these are done in huge size, some of which could also be executed over at the CBOE. So these trades, these 1-by-3 call spreads that are done to basically take advantage of the market making a move up, but not too big a move, and then that trader gets rewarded because they own the at-the-money call and they're short a bunch of calls that finish out worthless. Now, we've had a couple of our guys investing in this fund, and when we watch it, in the first couple weeks of the year, they were doing great. Why? Because the market would get up to 2,300 in the big contract for the S&P and then basically flutter right there and not break through. When the market breaks through to the upside, this trader has to chase and buy more and more and more futures, again, adding more demand to a market that's already heating up, that already has a lot of demand driving prices higher. So that's a bad position to be in for that particular trader. Danny and Mr. Top Step was telling me, hey, John, take a look at this. Market's up 1% today. This guy's fund is down nearly 3% today on days when it's blowing to the upside, of course, because he has a leveraged trade that makes him shorter and shorter as the market climbs. Now, Zero Hedge, another friend of mine, actually wrote about this as well. I encourage you to check that out as well because Zero Hedge has great information every day. Be aware that not everything you see on either Zero Hedge or anywhere else in the media talking about this particular trade is right. A lot of times what I read, they're not talking about the right strike prices and so forth, which is critical to understand where that pain threshold kicks in. So just to make sure, check out Zero Hedge and check out Mr. Top Step. Both of them putting out great information, but we'll have a better write-up on it, I think, very shortly as far as how it's directly impacting you as an investor. And again, it's just increased demand on days when the market's hockey sticking to the upside anyway. So just be aware of that. Also be aware that tomorrow, Friday, the 17th, our last trading day this week, is probably going to feel different because we've got a 3-day holiday, or basically Monday, the President's Day, we're not going to be trading. So we've got 3 days when there won't be significant trading in VIX or S&P futures. That impacts how people trade tomorrow. So be aware of that because it'll feel a little squishy. A lot of guys on our board over at Investitude are already saying, hey, I'm taking time off, going to go skiing. That's what I'm going to do. I'm going to go back out to Park City and go skiing. And I think a lot of people are going to either hit the beach, hit the slopes, or just take a couple days off because the market's going to feel a little different with that holiday shortened week next week. I'm John Najarian from Investitude.com. Hope you have a great day. Tell your friends about the blog, the vlog, as well as our podcast, which we put up every day. Thanks for joining me.